Hey there, friends, fans, and foes of Dad Saves America. John Popola here, and I am really excited to share a tool, a budgeting tool, with all of you. As we sit here, it is the end of the year. The start of the new year is upon us, and it is the perfect time to take stock of our financial lives and look ahead. This is a tool that has been the culmination of about a decade plus of work as a small business owner myself. I didn't come into this world, frankly, knowing much about anything. So this is something I built first for me in running my businesses, my small businesses, and then ultimately adopted on a personal level. And I think it is really helpful. It's really instructive. So I want to walk you through it, and then you can download it for free at dadsavesamerica.com. It will be available as both a Google Sheets link that'll duplicate for you into your Google account if you've got that, as well as a Microsoft Excel file, a program I personally despise, but is fairly common, and so we will provide that as well, though I wish I didn't have to. My personal favorite is actually Apple Numbers, which nobody uses, but is glorious. However, in the name of universal access, we've made it available in the things that most people actually use. So, how did this come about? Well, when I left my job at Spike TV to start Emergent Order, the company that then became Emergent Order Foundation, the home of Dad Saves America, I faced an interesting problem, which was I had no idea what I was doing. I had never studied business or finance or economics, but I did have a couple mentors that laid an important foundation for how to operate. And they gave me a couple tips that I want to share because they're actually universal tips. The first is that there's a saying, the top line is for show, the bottom line is for dough. Now, what do I mean by that? The top line, that is gross revenue. That is your salary, let's say. That's all well and good. That's for show. Oh, we did so much money this year. We got $1 million, $100 million, $1 billion in revenue if you're a business, whatever. The bottom line is what you're left with after you subtract all the expenses. That's our personal savings by the end of the year. That's the business's retained earnings or profit. That's the dough. Operating with an eye on the dough is what really matters. We don't want to be running into greater and greater debt every year. One of the most surprising and frankly depressing things that has happened to me in my young professional life as an entrepreneur was developing this style of budgeting to a point where I thought it was working pretty well, but I figured I must be doing this wrong because I don't have a background in this kind of finance, and taking my tool to what turned out to be multiple accountants whose response I was hoping would be, oh, you forgot this, you forgot that. Oh, no, that's not the right way to do it. And instead we're like, that's a pretty good tool. Like, I don't know how it is that I have not encountered this style of budgeting. Maybe it's in really high-end software that I've never used before. But over the past decade, I have found no other place where this kind of tool that works this way exists, which is why I am so excited to wrap it up in a package, in a little gift for you. Let's jump right into it, shall we? I'm sorry if spreadsheets scramble your brain. They do for many people, my wife included, frankly. I show her this, she's like, don't show that to me. It's driving me crazy. Along the bottom, you'll see several tabs. The first of which is instructions. And this will essentially walk you through what I'm going to do here to the best of our ability. Along the bottom, you also have a starting point budget, the balance sheet, which is where you'll see how to keep track of the actual cash, where it is at the end of each month, the cash flow budget and projections. This is where all the action is. This is the thing that most people never think about, never look at, including in small business, which is amazing. And then we've got a couple other things that are worth just paying attention to. These are, I call them the paycheck registers, just a way of keeping track of your actual paychecks. These will get auto-completed when you fill out the first tab. Now, going back to the instructions here, there's a couple concepts I want to talk about. In the business world, we have essentially two ways of thinking about the money operations. One is a flow. That is the profit and loss statement, the P&L. That is money coming in, money going out. You either have a profit or a loss. If more money went out than came in, you got a loss. That's a flow. It's continually moving. It's over the course of a period of time, like a year. And then you have the stock, as economists say. This is the balance sheet. This is a snapshot of where your financial position is. This is your statements of your savings and checking account, your credit card balances at the end of the month. These two things obviously work together. Now, at the government level, these two concepts get confused because we have the deficit on a monthly basis and an annual basis. That's the flow. And then we have the debt. That's the stock. So monthly deficits, annual deficits keep piling more and more debt on the stack. But the debt and the deficit are not the same thing. The deficit is the flow. The debt is the stock. And we're approaching 40 trillion in debt and over $1 trillion a year in new debt deficits. We don't want that. We want to be in surplus, which Uncle Sam has only done basically for a couple years in the late 90s and otherwise has been bleeding all of our money into red ink every year. We can't do that at the individual level. We eventually will go bankrupt. We will run out of money, run out of other people's money, run out of our own. So this is one way to help get yourself on a good course. Let's jump into the starting point. That is the budget. Now, I've pre-filled out a couple of placeholder numbers. These are going to vary, but I'm going to talk through as if we have basically a two-income household. At the top here is income. And the important thing to think about here is that your cash is the bottom line of your paycheck, right? So you have your paycheck, you have whatever you're making. Let's say you make $60,000 a year, and you're going to have FICA and federal taxes. And if you're fortunate like me, you live in Texas and you don't have any state income taxes. But the net pay, the money that actually hits your checking account, that's what you have to work with. You don't get to spend your entire salary. You spend your take-home pay, your net pay. So I've provided some links to calculate this. Obviously, you've got your pay stub, so you know what's coming. But if you want to take a look and model things out, if you're thinking about changing jobs or you're negotiating your salary, you're trying to anticipate a raise, stuff like that, hopefully, you can click on that and basically enter your estimated paycheck. So let's say, for example, our pay is going to start at the first Friday of the year. This would be, in this case, January 3rd, 2025. And let's say you're expecting that your gross pay is going to be $60,000 for the year. That's your salary, $60,000 a year. And let's say you get paid bi-weekly. Your pay frequency can sometimes, and for many of us, create an oddity that is easy to overlook unless you do the kind of budgeting that this tool will make possible. But let's go through. I'm going to kind of leave all this to this as it is. We are already set up to be in, actually, let me pick. I'm going to pick Texas because I hate taxes. It's part of why I moved here. Taxes are bad. We want them to be as low as possible. They go to people who waste our money, use it to kill people. I don't like any of that. Calculate. This gives me $1,930 every paycheck. That's taking into account federal withholding, Social Security, Medicare, no state taxes because we're in Texas or Tennessee or Florida or a handful of the other glorious tax-free states. If you're in New Jersey, like my former home, this number will be lower. I'm sorry. I've been there. It's the worst. One thing right away that many of us don't realize, and I have been on both sides of this. I have worked for big companies and I've been an employer. There's an interesting thing called the employer side payroll taxes. So we see Social Security and Medicare taken out of our paycheck. And that is, in theory, going to fund our retirement and fund our future medical expenses. In reality, it's doing no such thing. It's paying for current recipients. That money goes into the federal government and immediately out the door. But our employers are kicking in an equal part to the federal government for those two line items. And what most people don't realize, is my first little educational moment, is that could come to us. This is one of the many lies baked into the structure of getting paid in this society. We sort of force a bunch of social policy onto the business sector and pretend it doesn't work the way it actually works. So as an employer, all I care about as your boss is how much you cost. I don't actually care about your salary. I don't care about your health insurance. And what I mean by I don't care is it's all cost to me. What matters is when the payroll is run, there is a number that will come out of my business account to compensate you. And what you as the employee, and I am both an employer and an employee myself, don't fully see with our pay stub is that there's a bunch of money, some of which going to the government and some of which going to our health insurance, that is essentially compensation that we could get, but we don't. And we don't see it, and it is obscured. So when you look at the $143 for Social Security and the $33 for Medicare in this calculation, you should double those because that's more money that could be going to you, but instead your employer is sending to Uncle Sam directly. This is not my boss is paying it. You're paying it. Your boss doesn't care. I don't care where it goes. I'd rather give it to you, but I have to give it to Uncle Sam. If you work for yourself, if you have a small business, if you are a 1099 freelancer, you do pay the whole thing. They call it self-employment taxes, but it's all the same. It's all the same numbers. It's either roughly 7% or roughly 14%, but you're paying all 14%, and don't let anyone tell you otherwise. They're just liars. They're just trying to socially manipulate you. The other piece of the puzzle here that is really important for people to understand, your health insurance benefits, if you get them from your employer, are compensation. Again, we provide our employees health insurance. I have had to deal with this for over a decade, constantly changing plans, trying to find the best benefits. I frankly don't want to do any of that. I think it's stupid that employers provide health insurance. They don't provide any other insurance, or they shouldn't. But it is compensation. Again, that money just comes out of the business checking account and goes somewhere. I'd rather it just go in your pocket. So when you're thinking about your compensation, you got to take those things into account. They're the actual total picture. Your paycheck doesn't give you all the info. That's a little background on what's going on. So, okay, making 60 grand, gross pay is $2,300. I'm going to put that in. $2,300. I'm going to set that first date. One other thing to do, as we sit here, it's 2024, heading into 2025. Enter that year for the budget year that you're planning, or the current year if you've downloaded this in the middle of the year and you're into it. I'm going to say my spouse. Let's say my spouse is making 52 grand. Again, living in Texas because we like to keep our money, and calculate. Yep, 1680. Now, there's a couple other places where you can add some additional compensation. If you get a bonus, you can set the time. Let's say every year you figure and you'll get around $1,200 as a bonus, let's say. If you do a little side hustle, a little freelance income, there's a place for that. Let's imagine every 3 months or so, I'm able to make about $1,000. Those numbers are obviously going to vary a lot. I'm trying to kind of strike a reasonable zone for this. Set it to quarterly. Again, you can set all these frequencies here. I'm going to set that to quarterly. And then maybe there's some other income that's just odds and ends, gifts from family members, stuff like that. That's the top line. The top line for show. There's 109 grand roughly to work with. If I'm making 60 and my wife's making 52, or vice versa. Maybe I'm making 52 and she's making 60. Or maybe it's one person and you're making over 100. Or maybe you're making less. But this is kind of right around median income in the United States, roughly. So that's kind of what I'm working with here. Now, that freelance income, this is one of the first mistakes people make, is going to have to get taxed. You're not getting out of it. So as an expense, and you'll see my emojis are as appropriate as I can. I wish I could make it a far more menacing gun, but our emoji overlords have taken the guns from being Dirty Harry into water pistols. I've set the estimated cost at 25%. So what that's going to do is take that freelance income and add 25% of it as an expense. If you see here, $4,000 next year in estimated freelance, $1,000 is going to go to taxes. And now we can go down the line of all the expenses and input them. I've filled out some initial numbers here, but I'll talk through some of them before we move into the next phase. One of the things about budgets like this that are super useful is it's a great way to be reminded of expenses that you have but don't think about all the time. That's one of the benefits of this exercise. We've got all kinds of stuff that we set and forget, and then sneaks up on us. And so when we're thinking about where can we cut back or what should I be looking at to reevaluate, not having it all listed in a budget makes it really hard to do that. And our inboxes are filled with crap. So trying to sort it out just by paying attention to the mail we get in a month, that's not all that useful. That's where the budget comes in. Okay, so as we go, we got housing, rent or mortgage. I've got us set here at $1,500, depending on where you live. That is an achievable expense, although we have really been screwed on the housing cost front. It's been something that has crushed us as Americans. And there's a lot of reasons for that I won't get into here, but I intend to in future videos. If you're renting, your real estate taxes are basically baked into the cake. If you're a homeowner, if you bought your house, you've got your real estate taxes more explicitly. They might be rolled into your mortgage payments. It's called escrowing. Or you might pay them separately. I've got it split out here so you can pay attention to this and just kind of know it and anticipate it. You need insurance. There's going to be some maintenance. Again, this is kind of stuff that's going to happen on a monthly basis. And then a little fudge factor for other housing expenses. Transportation. Got 2 people, got 2 cars. I set the car payment at $350 a month. Maybe you do some public transit. Maybe you take the train or the bus into work and you've really got your car mostly for the weekend and the evenings. That was my life for a long, long time when I lived in Jersey and took the bus into New York City every day, which was absolutely punishingly awful. 4 hours every day on average of commuting. But I guess I taught myself economics during that time, so there was an upside. Gas is going to vary. If you're here in Texas, it's relatively cheap. If you're in California, they are trying to destroy your life, so it's double the cost. Car insurance, car maintenance. Again, I've got the gas on weekly, the public transit on weekly. I've got the car insurance on monthly. I've got the maintenance on quarterly. Figure stuff happens. Food, groceries, restaurants, other stuff. I set this to weekly, but again, in every instance, you can pick the frequency that you want to budget with. $350 a week for groceries, $100 for restaurants. That's probably low with how much inflation. So let's bump that up a little bit. Let's just say $500 for groceries and $200 for restaurants. Electricity, gas, water, internet, cell service, cable TV. You know what? I'm going to zero out cable TV. It's 2024. If there was one lesson in 2024, it was it's time to zero out your cable TV. That's a place to save in 2025. Just stop paying for that. Health insurance, this would be the out of pocket. Now, you might set that to zero if your premiums are coming out of your paycheck and you've already accounted for it. I've got it in here though, as well as sort of monthly estimates for out-of-pocket expenses. This is going to vary wildly, right? You might have a chronic disease and have expenses on an ongoing basis. You might have kids and anticipate all kinds of problems ranging from sniffles to broken stuff happening all the time, depending on how many kids you have. I've kind of set a kind of minimum viable set of expenses here. Maybe you've got a gym membership that you probably don't use as much as you should. And then you've got the stuff that tends to get forgotten, but I think is a good idea if you can afford it, and you should really try. Disability insurance. This doesn't need to be expensive, but it's a good idea to have. I have family members who have been disabled and had disability insurance, and it financially saved their butts. And not having it means you could really be in dire straits. You might be able to get it through your employer, or at least through your benefits system, but I'd recommend trying to get this type of coverage in case you get injured and can't work. Life insurance, there's another one. Again, depending on how young you are, you can get into these plans pretty early. Insurance always feels like a waste. In fact, it's a kind of dead weight loss because, look, let's take life insurance, which doesn't get complained about nearly as much as health insurance for reasons that are kind of baked into the cake. But I want my life insurance to be a waste. I don't want to make use of it because I would rather continue to live. But once I have a dependent, I didn't have life insurance when I was younger. Once I got married and then had a family, I got life insurance because if I get hit by a bus, I want my family taken care of. But I don't want to get hit by a bus. So life insurance is a kind of cost of doing business. We can want and wish and hope for magic and everything to be free, but nothing's free. And this is an example of an expense that you really probably should incur if you can, especially if you have dependents, if you have a wife or a husband or kids, you should have this. It's important. Then we got school. Let's assume there might be some kids, or maybe for yourself. I assumed no kids as of right now, but you've got student loans because for some reason you went to a communist training camp and now you're stuck with the bill for that. I'm sorry. On average, you're probably working in a field unrelated to your major. I'm sorry for that too. We should be doing better as a society on this front. But there you have it. It's stuck in. It will survive bankruptcy because everything about the school system is corrupt. Might have a pet. Got to feed the pet. Got to keep the pet healthy. That's in there. And then after all of that, you've got just the stuff you buy. So I've got, let's say, $300 a month. That might be low for just monthly shopping. Let's just say, again, inflation, let's make that $400 a month. Okay, there's some other expenses here, and in that other expenses category could be some stuff that we're really not going to get into today. That is 401k contributions, for example, or other kinds of investment. They aren't even technically expenses because they're investment, right? So they're just sort of transferring money from cash into a longer-term asset, if you will, but I've left that out because it's more complex than this tool is intended to be. So here we are. We have worked our way through the cost of living. And we've gotten to the bottom. And we're in the green, which is good. We're already doing better than Uncle Sam. We're saving $240 a year. So this annual amount, this is calculating the annual costs. And you'll see how that impacts the next tabs in a minute. But this is an important first place to be. You really want to be in the green. I spent the early part of my working life in the red, racking up credit card debt, working at MTV, taking the bus in from New Rochelle, racking up credit card debt, stressing myself out. Sometimes that's what you have to do. It's often unavoidable. But as we try to plan, trying to get that down, get those expenses down, and obviously try to make more money. It's the only way we're going to make progress in our personal lives. We got to be in the black or in the green in this case. So let's just take a quick look before we move on to the next step, because $20 a month net isn't a lot of headroom. So I think maybe I need to be a little more frugal on the monthly expenses. I'll bring that back down to $300 a month. Maybe I can renegotiate those student loans, but probably not. I probably shouldn't eat out on a weekly basis quite as much. I should maybe bag lunch. Let's see, can I get that down to $100 a week on restaurants? Maybe just make Friday night, Friday evening. There's not a lot of room to work with, right? I mean, there's a lot of expenses that we don't have a lot of control over depending on our circumstances and where we live. But even just those two things added up quite a bit. But now we're at $500 a month in savings and $6,000 at the end of the year saved. That's a pretty good place to start. Okay, now I want to take you to where all the action is. This is the snapshot. This is often as far as anyone goes. And this is also where most of the financial software that's out there, whether it's QuickBooks or Copilot Money, this is usually where they stop. They create a budget, and that's kind of it. And maybe they snapshot it over the month, but they don't really help you look at it over time. Here's the magic. Here's where all the action is at. It's in the cash flow budget. So this takes all of these line items and spreads them out over the course of the year, over the course of the 12 months of the year. This was the aha moment for me. This is how multi-million-dollar a year business cash flow has been managed, and managed successfully through over a decade of ups and downs, including almost being killed by COVID and nearly running out of money, more than once. The piece of advice I got from my mentors, the people that I turned to who were older and wiser than me, was pay attention to cash flow. Cash flow is king. Cash flow is how you live or die. And there's actually a concept that's worth talking about for a moment about this. It's the concept known as liquidity versus insolvency. So if you're in your budget view and you're in the red, you're in trouble. You're in the zone that looks more like insolvency. If you're a bank, if you're a business, insolvency means you can't pay your debts. You can't pay your bills. And that's when you might have to go into bankruptcy. You get pushed into collections. All kinds of hard stuff happens. Illiquidity, being illiquid, is related but not the same. And that is, the budget works, but when the bill comes due, I didn't have the money. That is more frequently the challenge, is the bills coming due before the income comes in the door. And this is being illiquid. So what does that mean, liquid? What are we talking about? Water, liquidity? It's basically how easily can your money flow. So the most liquid asset you have is your physical cash in your pocket, more or less. You can spend it anywhere immediately. It flows like water. Next in line would be your debit card pulling out of your checking account. Functionally the same, completely liquid. These are the components of the money supply. You get slightly less liquid with your savings account, which, pays interest. That's called a demand deposit account. And technically it works more or less like your checking account. But there is some limits on the number of transactions. It's a little less liquid. You tend to need to move stuff into your checking account to spend it. But things like Venmo and stuff have made that all pretty similar. Another source of liquidity that can be very dangerous but is necessary is your credit card. So your credit card works like your debit card. The difference is you're racking up debt, not spending your savings. All of that is relatively liquid assets or access to capital in the case of your credit card. Then you get into some other things that are less liquid. So if you have stocks and bonds, that's not as liquid. You can't spend it right away. You have to liquidate it. You have to sell it. And if you have to sell it quickly, or if you have to sell it at a time that's not great, you might take a loss. That's not liquid. Your car is definitely illiquid. Yeah, you can sell your car. I have had to do this. I have had to sell a car in a kind of an emergency situation to be able to pay for a house. It was not my favorite. It took a big loss, but you can do it, but it's pretty illiquid. It's more illiquid than your stocks. It's more illiquid than your 401k, which you can borrow against sometimes. And probably the least liquid thing is if you own a home. That is a truly illiquid asset. It takes months to sell a house and have that money end up in your account. Even if it's a hot real estate market, it's still going to take a fair amount of time. So this whole budgeting system and cash flow management is about managing your liquidity. That is what this is all about. How do you stay liquid so you can build your savings and pay your bills? All right. So that budget starting point you saw here, we just went through, that now flows across the year. And we're sitting here in December, and we can just see it's averaged all these things out. And at the bottom, you see the net income summarized on the annual column. And then you see the way it flows, getting all the way down to December 2025. I want to talk about this bottom row a little bit here. Row number 70 is net income on a monthly basis. And then 71 is adding it up. So each month it's adding the net from the current month to the savings from the last month. And so that's how we end up at the end of the year in December of $6,640 of accumulated savings. Notice the red, though. And this is one of the things that is sort of this weird aha. And as we've sort of tested this internally, we found a lot of people had the same aha I had when I noticed this. And that is that we tend to think of our budgeting as happening on a monthly basis, right? There's 12 months in a year. So we think about our month. Most of our monthly bills, our rent, our car payments, our insurance payments are monthly. Our credit card bills are monthly. But there's this weird thing. There's 12 months in a year. There's an average of 4 weeks in every month. And so that would mean, if you just do the simple math, there's 48 weeks in the year. Only there isn't 48 weeks in a year. There's 52. There's actually 4 extra weeks buried inside of the various months. And so if you get paid on a bi-weekly basis, so for example, if you get paid every other Friday, you're going to get 26 paychecks, not 24. That means that 2 months out of the year, you're technically going to get 3 paychecks instead of 2. And what that does, as you can see in this cash flow, is that means that you're going to have 2 months with this outsized savings, followed by a bunch of red ink. Again, this depends on how much headroom you've got. It could be all in the green if you're lucky and doing great and keeping your expenses low. But at that budget level we've set, and just to go back again, you've set that date, that first date. This is the first Friday of January 2025. January 2025 has 3 Fridays if you're getting paid bi-weekly and you're getting paid on the first Friday of the month. So January is one of those 3 paycheck months. The next one is in August. And this math does seem to work. There's some leap year stuff that seems to break this spreadsheet. If one of you are smart enough to fix it, please let me know and send me the update and we'll redistribute a new version. But in general, this is going to work. So what does this mean? This means that you have to be careful about your liquidity, keeping that money that comes in these sort of off months in reserve. Don't trick yourself into spending money that you didn't budget to spend because you get to the end of the month and you see, man, I did better than I thought. This is what this is all about. Budgeting in a lot of ways is just hacking your behavior. Trying to get yourself to not do the things that are self-defeating that get us all into trouble. So the next part of the process here is to look at your budget. Now, again, if you're in spreadsheet brain freeze land, I totally understand, but this tool is going to be hard for you. Now you got to look at this. This has all been auto-completed. Once you start to manipulate it in here, the formulas are going to break. So my advice is after you do the initial budget, duplicate the file just so you've got it saved so you can make changes as necessary. Let's look at a couple examples of things that don't tend to happen monthly. So if you're paying your real estate taxes separately from your mortgage, for example, we've got them set at $6,000 for the year. If you're not paying that $500 a month, then select it all, delete it, and put it in the month you're going to pay it, which is probably December. So right off the bat, you can see something when we scroll down to the bottom. That is, now all the months look like you're in the green. Until you get to December, where you're going to be in the red by $5,600. So you better save. This is what this is for. You go through and make sure you know when you're going to have expenses that hit you uniquely that are easy to forget. Insurance payments, car insurance payments, sometimes those are twice a year, easy to forget. In general, if you can, setting things up to be monthly is going to help you manage this and sort of force you to save on a monthly basis and not have the ups and downs. Again, the other thing is this is taking out monthly the estimated taxes on freelance income. You want to set that aside. I recommend kind of creating a separate bank account and putting just to hold estimated taxes for freelance income. Freelancers, you know where I'm coming from here. You know what it's like to think I've got to remember to pay the taxes and then not save for it and get to the end of the year and be totally screwed. So hack your life so you don't end up screwing yourself up. One way I like to think about this is that my future self is a complete moron. I need to, at all times when I'm planning, act as if I'm going to forget and I'm going to screw up. And when I do that, it turns out I'm right and my future self is a moron, and I'm so grateful for my past self. And when I don't, I just think I'm a moron. I'd rather not get caught with my pants down thinking I'm a moron, being unable to pay my real estate taxes or pay for my insurance because I thought I had more money than I did and I bought the PlayStation 5 Pro because I'm a nerd. Like, that discipline is the key. That's one example of many, but it's a good place to start. So go through your life, look at your bills, and then map it out. A lot of these things are going to vary. Now, you get to the end, you say, okay, let's see, is there anything else worth doing here? Gifts. We averaged $900, but chances are we're not spending $75 a month on gifts. Chances are, we're here in December, we're spending most of that money in November and December, right? So let's say $600 in November and $200 in December, and then maybe my wife's birthday is in June or something, and I get her, we go out to dinner or something, and there you go. There's the gifts. Again, you're saving for Christmas all year long, right? Don't get caught with your pants down for the Christmas presents. Set it up in a flow. Look at the year. Look at the months. So once you've done all that and you have your expenses accounted for on a monthly basis, save this, duplicate the file, call it your sort of annual budget projection. Then you'll keep working on this on a monthly basis. And this is where this tool moves from being a plan to a form of accountability. And this has been so helpful, both on the business side for me and in my personal life. I do this at the start of every month. I look at reality and compare it to my plan. I've used different pieces of software along the way to help give me reality. At the most basic level, you've just got your account statements. So this is where we get into the stock, the balance sheet. I'm sitting here, it's December 2024, I'm planning for 2025. At the end of the month, as we roll over into January and we get to work using our tool, we open up those statements, we go to our bank website, and we put in the actual balances on the last day of last month. I'm going to name these things. This is my personal checking. This is my personal savings. And let's say this is my Visa card. And I go through and I put these balances in. $1,250 in my personal checking account, $500 in my savings account. I don't have a lot of headroom. And I've got a $1,500 bill on my Visa card. Now, I've put in here a bunch of other stuff. This is just to track. There's none of the other things other than the liquid assets are feeding into the overall calculations. But this is to just help track your thing. There's a lot of other ways of doing this. There's all kinds of financial dashboards and services. Maybe you use Wealthfront or maybe whatever. This is just to offer a baseline of sort of calculating your net worth to the best of your ability if you're not using any of those other tools. Looking back at December, there's $1,750 in the bank. So I'm going to go back to my cash flow now and see there's $1,750. All right. Having looked at it, I check this little month is actualized. So that's what it means when I put the real numbers in my liquid accounts, my checking, savings, my Venmo, my PayPal, the liquid accounts I have access to that I can use to pay my bills. When I check that box, it fills in this accumulated savings number with the actual. And everything ripples down from there. And this is where the accountability of the tool really becomes powerful. And this is the habit that I encourage you to use this to build. All right, we move into February. Okay, we think we're off to a good start in January. We've got our budget. We kind of have a sense of where we should be. We should be coming out of January with 3 pay periods with like around $6,200 in the bank, all in. That is what is being projected. We're sitting here now, fast forward a month. It's like the first or second week of February, and I've taken some time to sit and say, okay, let me actualize. Let me put the actual numbers in. And I say, okay, what do we got here? Well, the personal checking account, let's say, is at $2,500. And I moved some of the savings, some of the money from the checking into the savings, because for now it's earning some decent interest. And let's say now that's got $3,000. And I did manage to pay my credit card down a little bit. So maybe it's only at $1,100. You don't want that one going up. That is the trick that we all screw ourselves with. We think we're doing okay because we put a bunch of those expenses on our credit card and then pay the minimum or don't pay all of it off every month. Maybe you have to do that. Maybe that's actually wise in some cases. Maybe it's necessary. But that way lies Uncle Sam style danger. And we all know it. We've all been there. I've been there plenty. I have had my moments of near nervous breakdown because of credit card debt. I know exactly what that feels like. I know how much it sucks. I don't have a white beard for no reason. All right, so that's where we ended up. 5,500. We go back, we sort of put our numbers in, and it's like, wait a second. And at this bottom here, line 74, there's a variance, project versus actual, the projected savings versus where we were. What's going on here? Where's that $700? Every month I do this, and every month I'm off a little bit, sometimes a lot. And this is where we keep ourselves on track. Maybe I've got more money than I think because a big expense I was expecting was put on my credit card and it's going to hit my checking account next month. The credit cards create this like fudge factor because you spend this month and then it gets paid next month when I pay the balance. This also makes it a little hard to reconcile if you're using programs like Mint or Copilot, stuff that sort of aggregates all your transactions and shows you what you've spent. Those are showing you the transactions if your credit card is attached. But they won't necessarily relate to your bank account statements because they're showing you the transactions when they were spent, not when you paid the credit card bill. So that's a couple nuances to pay attention to. But these differences between your plan and reality is where you get to look back and say, hey, what was this? Sometimes that conversation is like, hey, Lisa, what was this Nordstrom charge? Right? Oh, yeah, we got that dress for that event. Okay, fine. Okay, understood. Or it might just be a bunch of stuff that you thought was going to be cheaper than it turned out to be. And that's the key. You don't want to budget in la la land. You want this budget to reflect reality. So when you are underestimating your expenses, don't just let that go. Go in here and update it. Put the real numbers. Oh, gas has gone through the roof. I think moving forward, I need to spend more on gas. It's more like $300 a month. And so I'm going to click that and I'm just going to drag it out to the end so that I'm accounting for the fact that gas was more expensive than I thought. And away you go month after month. So once you've done that, you hit the little actualized and you see the savings reflects it and the projection rolls out from there. And now you look to the end of the year and that's what you've actually projected to have. The end of the year rolls around and you see where you're at. You see how you did. You take stock of the situation and you do it all again. You rinse and repeat until the day you friggin' die, which I know is the nature of life. It's the cost of living, literally the cost of living and figuratively the cost of living in terms of our pain in the ass stress that we all have to go through trying to make ends meet. That's how I use this tool. It has evolved over time. There's a couple other pieces I'll show you real quick. One is this paycheck register auto completes from the information you put in at the budget starting point. it's being a little crude because depending on how much money you make, Social Security has an income cap. So if you're making enough money that you actually stop having to contribute to Social Security, I think that's over $160,000 at this point. This doesn't perfectly account for that. So that's one thing. There might be other changes you're anticipating, and so it might be worth making changes here. The actual cash flow for income actually draws on the paycheck register. So one other thing you could do to make things even more accurate is if you're anticipating changes, you can put it in what you're anticipating here. This is sort of the annual snapshot. And then you can actually go in and change the particular paychecks so they reflect what you're actually going to make. That's just one extra level of detail that if you really want to super geek out and be really, really accurate, you can do. You can put notes and think, oh yeah, this is where my bonus comes in. My bonus tends to come in in, say, April after the year's been closed out or whatever. So that's what those two tabs are for. And there you have it. Life is complicated. This spreadsheet is somewhat complicated, but I think if you use it, it will take a lot of the complications out of life, or it will at least help you grapple with it. We don't get taught this stuff in school. I didn't get taught it in school, and I got good grades in high school, AP classes. I went to college and never encountered any of this. And that is a complete dereliction of what is supposed to be the service we pay a lot of money for to prepare us for life. But that's where we as dads and moms come in for our kids and for each other, is to fill the gaps in our knowledge and experience. That is what I hope this can do for you. We will continually improve this as we finally roll it out into the world. Please give us feedback. Again, if you want this tool and want to start making use of it, go to dadssavesamerica.com. Please sign up for the free newsletter so we can stay in touch. That way, if our Google overlords decide that you shouldn't see any more of our videos, you will still find out when new ones drop. And if you want to support our work, I encourage you to become a paid subscriber. There is other premium content available for our paid subscribers, including Zoom calls and other things that give you access to me so you can tell me how much I'm getting wrong, which tends to be what people want to do, and that's fine. And I hope you have a great year ahead. I hope our country starts to bend the cost curve. I'm not super optimistic about that, but I am more optimistic that you can do it for yourself. And if we all do it together, we might just be able to save America after all.